Hey, everybody, welcome to That Expert Show, where you help run the show. I'm Anna Canzano, and tonight we're talking about financial fitness. It's toward the beginning of the new year right now when a lot of people are talking about setting physical fitness goals. You might be starting a new diet, but I thought it would be a good time to talk about financial fitness because we could all use some help understanding what the challenges are and what the opportunities are as far as our money goes this year in 2022. Joining us live tonight is the Education Program Manager for OnPoint Community Credit Union, Erin Moore. Erin, thanks so much for being on That Expert Show.
Hi, Anna. So glad to be with you.
Thanks so much for being on this show because I think, first of all, that title, Education Program Manager, is so cool that OnPoint emphasizes this as part of, the way that it does business. And I would just love to start off with you talking about, your advice for people when they are trying to set their financial goals for 2022.
Well, the start of a new year is a great time to check in about goals, and we may have many of them. But bringing intention to goals related to finance is really a great way to reduce stress and help you get started. So, my number one tip is to have an idea of where you've been. And yes, I mean, check your budget or create a budget. A budget is a plan for your money. So knowing what you're spending, and then you can compare it to what are your goals, right? What are you hoping for in the future? And are there any changes you need to make to get there? This is also
No, that's great. Sorry, I would love to ask you more about setting a budget when it comes to an individual or in a household. But I know that part of creating a budget is also setting up an emergency fund. Does that amount change depending on how old you are?
That's a great question. How much you need in an emergency fund really depends on your own unique experience. But in general, a great goal is to work towards having 3 to 6 months worth of expenses set aside in an account that you're not tempted to touch when you're ready for vacation or another goal, but that's truly meant for an emergency. You can start small and automate your savings. And even if you start with a smaller goal, maybe you start with $500, and once you get there, you can celebrate and then keep on going.
The celebrations, I think, are really important for folks. As let's say somebody is watching this show. And by the way, if you are watching us live right now, especially via Oregon, the Oregonian, feel free to chime in. Tell me your comments, your questions. If you have questions that you'd like for Erin to answer, we are monitoring the live feed right now. So I invite you to post your questions and we'll get you answers directly from Erin. As people are going to set a budget, if they haven't done one before, what is the basic framework that you advise for people to go with?
Well, I say the best budget is one that works for you and you can stick to. So I start by thinking about, I tend to be a more digitally inclined person. So for me, it's an app. But depending on who's involved, maybe you've got a spouse or a roommate or someone else that you're making financial decisions with. And so what's a way that you can share that information together? The basic tenets is you want to start by taking a look at the income that's available to you, the expenses or obligations, and also the goals that you're saving for.
That's great. And then when you talk about, there's a lot of things that are current to the time right now as far as inflation. And I would love to talk to you a little bit about that. But before we get there, can we talk a little bit about credit? Because I think people think of credit as being the enemy, but I think there are ways to use credit to your advantage, right?
Absolutely. So, yes, credit can be a nerve-wracking topic, and we all accumulate experiences that are going to inform our approach. The best way to start is to check your credit report so that you know what factors may be impacting you. And especially right now, since the pandemic, we've seen a surge in identity theft and fraud attempts. And so really one of the best ways you can start when you look at your credit report is the information reported there accurate? Does it all pertain to you? Once you know what's there in your credit report, you can make a plan for anything you want to tackle. And your financial institution may be able to offer you access to your credit report. You can also get it online from annualcreditreport.com.
Sounds like you got a call coming in there.
That's actually a spam call right now, which is why I
Oh, those
anticipated
spammers.
have it muted. Yes, indeed, they are out there. So monitor your credit report and don't provide any information to someone you're unfamiliar with.
Good timing on that. It's interesting because Mike here is chiming in on Facebook. Thanks, Mike. He's saying, he just retired, and that couldn't have happened if he hadn't started saving more than 30 years ago, putting 10% of his income into a 401k, even when times are tough. He says he never wavered from the savings and gradually increased it. He also put enough aside as an emergency fund. He says you have to be willing to forego impulse buying and make sacrifices. And he's absolutely right about that, Mike. Thanks for sharing. When it comes to specific financial challenges that you are hearing, members of the credit union talking to you about right now, what are they saying to you? I know the housing market has been insane. I mean, with houses going with, as many as 30 offers on one house or more, and people offering tens of thousands above asking. What is your advice for people when it comes to the housing market?
Well, first I would say have a plan in mind. So if home ownership is a goal for you, or you're thinking about making a change, right, to a new house, it's a great time to get started. Rates are still low, although we have some indication that they may be rising in the coming months. So taking stock of what you want in your next living situation, and that includes the financial considerations. So what are those costs associated with housing in addition to your mortgage or your rent payment? Are you going to be making decisions with a roommate or a spouse? And making sure you're comfortable with that plan. So you have to know your limits and then think about those other important factors and build them in.
There's a lot of talk right now about inflation too. And, what are the conversations that you're having with folks around that? Because I've heard from realtors that investing in real estate, if you have the means to do that, is a way to combat inflation. I'm not actually sure why that is the case, if you can explain that.
Well, I am not an investment advisor, so I'm not prepared to speak to that point directly. But what we are hearing from our members and, folks in the community is, yes, there's a concern about inflation, particularly because sometimes we hear about it and we don't understand how it's going to impact what we bring home in our paychecks, or how we're, trying to meet our monthly bills and expenses. So there are some things you can do to help yourself prepare. Once you've got your budget, you can prioritize if you had to make change based on rising costs, where you would do that. In my household, for example, I've got 2 teenagers. So the grocery bill is a must, and I anticipate it might increase, if not due to inflation, due to teenage appetites. But you can do something like a home energy audit to see if there are places where you can increase your home's efficiency. You might also even check with your insurance agent. Are the things that are valuable to you properly insured? Or maybe there are some discounts you're not aware of that you can take advantage of.
I mean, it feels to me like everything is already costing more. Like I can feel our grocery bill going up, even though we're not buying anything different.
Yeah, absolutely. I'd say that not only is that true, but involving the folks in your household. So maybe you're the person who does, the budget or the shopping. That's a great conversation to share. It can give exposure to other members of your family if you're feeling stressed, and you can work out a plan together. But yes, increasing costs is something that we're going to have to continue to keep an eye on. And your financial institution may provide some resources on their website. I know we do at OnPoint. So take 5 minutes and see if you can find a resource or something that works for the time frame you have to increase your learning.
I think right now too, and maybe it's just my imagination, but I feel like there's more potential for fraud than ever. Like there's not only just the spam calls, but there's a lot of phishing. There's text messages that are making their way through to my phone now that look like they're legit, like, oh, I need to re-enter my password for something. Like, I feel like there's so many opportunities to get scammed into turning over really private, confidential information that could expose you.
Absolutely. Since the pandemic, I saw a statistic that said between 2019 and 2020, there was an increase in reported financial fraud and scams of over 119%. And that's just the cases that are reported. So being vigilant is very important. It's the beginning of the new year. So one great tip is to change your passwords. That's an easy way to add an extra level of security. You can also use your cell phone or multi-factor authentication. That's where someone sends you a text or an email to confirm when you're logging in. But be cautious and suspicious when you receive things, whether it's a link or the promise of a prize. And if you do think that you have provided information or been the victim of a scam, please contact your financial institution. We really do want to help you and support you in navigating the process. And unfortunately, we have more experience than you might think guiding members who have been in this particular situation.
Yeah, I mean, that can be such a headache, to have your identity stolen and to try and unwind all of that and, potentially have your accounts frozen while that is all happening. I've been down that road and have covered stories with people who've been down that road, and it's really painstaking. So good to know that you can get advice from you guys on that. Let's talk about interest rates, because I think that's been in the news quite a bit, and it's affecting, whether people feel like they have a chance at buying their first home. It's affecting, I think, a lot of things. Can you talk about the impact about the fluctuating interest rates and sort of the scuttlebutt about it right now before they actually go up?
Yeah, well, of course, everyone wants to be able to achieve their financial goals. And if buying a home and getting a loan is something that's required for you to get there, it can sure be nerve-wracking. So we've seen, as you mentioned, the market has been incredibly busy. My best piece of advice is to have an idea in mind of what your kind of must-haves are, that comfortable level of budget or financing, and then find a trusted financial advisor or mortgage representative to guide you through the process, someone who can really speak to your situation and your goals. There are many financial representatives out there, so take the time to find someone who you feel like is a good fit for you.
Well, let me ask you about that, because my experience has been that a lot of financial advisors won't even talk to you unless you have a certain level of assets. And those assets are not small. Like, they don't even want to entertain that conversation with you unless you have like something like close to 7 figures in assets, which I just don't think is the reality for a lot of us.
Yeah, absolutely. And I would say, I think that's a case, and there's a place for those types of financial professionals, but there are also many qualified, certified financial planners and coaches who are ready and willing to work with folks at all stages of income generation or meeting their goals. My recommendation would be to start with your financial institution. At OnPoint, we've got a group of financial advisors who are happy to work with folks. You might also consider researching a professional association in your area that may have a list. You could look for a certified financial professional who charges on a fee or an hourly basis. So you can find something that fits your budget and also get someone who's excited to work with you, which is what makes the process that much more successful.
Yes, definitely. Okay, thanks for the encouragement on that. What is your advice for folks that have amassed quite a bit of debt and they want to try to take that on and reduce their debt in terms of, credit cards, the bad kind of debt, revolving debt?
Yeah, absolutely. Well, and post holidays, this can be a time where we look at those credit card bills and they're higher than we hope they would be. Managing debt can feel stressful. So tackling it, beginning is an important first step. And that includes understanding kind of the scope of your debt. So if you've got more than one credit card or monthly obligation, start by writing those down or tracking them somewhere, because once you've got a full picture of your responsibilities, you can make a plan. It's a great time to include the folks you're making financial decisions with. So is that a spouse, a roommate, or a partner? And then you can choose. With the case of credit cards, if we're talking about that kind of debt, I usually recommend tackling the debt with the highest interest rate first, right? It feels really good to work on lowering that, decreasing the amount of interest you've paid, and then you can move on to tackle other debts you might have.
Is it practical or is it realistic to try to save while you are tackling debt, or should your focus solely be on eliminating that revolving debt, and then when you can hopefully accomplish that goal, you can start saving?
Anna, I love that question because many of us are juggling multiple priorities at the same time. When I think about tackling high interest rate debt, especially credit cards, for me, building a savings alongside of that is one tool to help me avoid needing to spend on my credit cards in the future. Now, sometimes that's not always possible, especially in the pandemic. A credit card can be a tool to use in an emergency, but if possible, even if it's a small amount, to get started doing both at once really will help you set up for success in the future.
Is there a proportion that you would suggest to people, or is that so individualized that it's too hard to say, okay, you should be, taking what you can and setting a certain percentage toward tackling debt versus saving?
Yeah, I'd say it's fairly individualized. It depends on how much debt you're carrying, if that's preventing you from working towards your other goals and your income. In a perfect scenario, that general theoretic rule, we ask for folks to hopefully have a goal of putting about 20% of their income away in savings. And so maybe that's something you work up to over time.
That's a good guideline. What is your advice as far as building credit? And you might have touched on this already in our discussion, but do you have some actionable things that people can do?
Mm-hmm. Well, building and maintaining healthy credit is important for all of us. And, credit is a continuum. So it's going to change over time. As I mentioned, pulling your credit report is a great way to start. And then thinking about the goals you have in mind and making a plan for each of those, making sure you're making payments on time and managing your credit accounts, understanding what the guidelines and the fees are associated with each type of loan or credit card you have is a really important component of healthy credit.
Are there some myths about credit cards that you commonly hear people talk about when they come to you, or that clients bring up when they're talking to you?
Sure. Well, everyone has a different experience with credit cards. There is a generation of some of us who arrived at college and, had that first experience on the quad at school where we were offered a credit card application and spent that up right away. I might be included in that group. I would say, a good thing to keep in mind when you're using a credit card is to have a plan to pay back those purchases, especially if you're using a card to get rewards or to help you navigate a brief period where you need some extra credit available to you. So know what you're getting into, understand how your bank or financial institution operates the credit card, and have a plan for those payments.
Well, and help me understand, because I completely relate to that whole experience on the quad where you get the free t-shirt or the Frisbee or the water bottle, whatever it was that they were handing out. And it was like free money. And, you're not always honest on the application. I remember filling out the application, and when it came to the question about household income, I'm like, well, I'll just wrap in all the money that, my house makes in terms of my family. It's so wrong, to be honest with you, to be hitting college students with that, because I think a lot of us fell victim to that and then wound up in debt and, whatever $1,500 credit limit we maxed out on wound up costing us so much more in the long run. I think there are laws against that now, right? Or at least there's more restrictions on what
Yes.
credit card companies can do.
Yeah, practices are absolutely changing. That's not to say that you might find yourself in a situation where you didn't realize ahead of time, how you'd be using that account. So keeping those limits low initially, when you think about maybe you've got young people in your household who are ready to start establishing credit. So a credit card can be a tool, but maybe you want to start with a $250 or a $500 limit. Something you can make a regular purchase on, like your cell phone or your auto insurance that you're going to be paying off monthly, is a great way to start.
Is it, because I know early on in my 20s, I remember closing credit card accounts. Again, this is just all part of my shoddy financial history before I wisened up. And is it true that if you, like I would pay off the credit card and I would feel good about it and then I would close the account, but then I heard along the way that that's actually a terrible idea because that is not good for your credit score. Can you clarify on that?
So closing a credit account can temporarily have an impact on your overall credit mix. So when we look at the items on your credit report and how that creates your credit score, one thing that the credit bureaus are looking at is the mix of how you're using credit and how many accounts you have. So it really depends on what you know about yourself and how you're going to use the credit card. If keeping that credit card open is just too tempting and you're going to spend on it and maybe not be able to keep yourself to that limit, then sometimes the best thing to do is to close that card. Temporarily, there may be an impact. I've also known folks who have, cut up the card and not used it, but left the account open. So it's not something that you want to do regularly, but managing the overall availability of credit that you have open is an important component of healthy credit.
Got it. Okay. And then going back to what you were saying about young people in the house, I've heard before, in fact, there was another, interview that we did on this show where the person we interviewed was recommending that, if you're a parent of a teenager, it's not a bad idea to add that teenager to a credit card to help them begin building healthy credit so that when they go to make a purchase of their first car, when they go to perhaps rent an apartment, that they already have some credit established. What's your thought on that?
As parents, we want to support our kids and give them advantages if we're able. And so adding a young person to a shared credit account that you are ultimately responsible for is certainly an option. I think what's also important to accompany with that is conversation and education. So as that young person in your life approaches 18 and then becomes responsible for any credit products they have in their own name, that they understand what that means. So they're ready to, take on their challenges on their own, make their payments on time, and not use more credit or advance more money than they really are prepared to pay back. So I think, it's a privilege to be able to do that. It's great at sometimes, and it goes hand in hand with those additional conversations and education.
Is that actually giving them a leg up, though, to be able to do that? Or, once they're of age, let's say they're 18 and they're headed to college, is the better strategy to create a separate card for them but have those same conversations with them?
Yeah, I think that depends on, what your ability is at home, your own credit, and your comfort with having someone else on an account with you that you're responsible for. So I would say it depends. They're both an option. Helping someone who's turning 18 begin to utilize a credit account is a great way to support them. So both can be great options.
Do the credit bureaus differentiate, though, between the two situations? Like, do they give more credence to, let's say, the 19-year-old, and yes, we have a 19-year-old, who has their own credit card and was paying paying it off monthly on time, no late fees, versus the 19-year-old that you're just kind of adding to your credit card account?
Yeah, it probably depends on how the credit account is set up. So whether that person is, the younger person is listed as a co-borrower or has the account on their own, both will help them establish some credit history, and then they'll really be primed to make strides once they turn 18 and can continue on that payment history on their own.
Got it. And then, let's see, what are we in now? End of January, almost into February. The tax season is approaching. Any particular advice that you would want to offer folks in this year's tax season?
Yeah, start now. Do it in steps that feel manageable to you, but tax season is officially open, so take time to gather your documents and prepare. There have been some changes, right? So we've got the advanced child tax credit that some of us have received. There have been other changes related to student loans. Maybe you've had a change in terms of your job or other things that may impact you at tax time. So starting early is a great tip. And then don't hesitate to reach out to a qualified tax advisor, whether that's someone you've worked with before. And if for some reason affording those fees is a challenge, 211info.org and the state of Oregon help facilitate a number of programs with nonprofit partners that can support folks who need tax guidance, maybe at a reduced or no cost.
When it comes to saving up for taxes, I've seen how, some people will actually create different accounts with their financial institutions, whether it's a bank or a credit union, and they'll literally have an account that says, okay, this is the tax fund, and then actually they'll create several different accounts. This is our adventure fund, and this is our, treasure chest savings, not to be touched unless there's an emergency. What are your thoughts on, people who create various accounts like that they can stream their savings into?
Well, I am certainly a fan of using separate accounts for very specific purposes. That's a good fit for my own financial style. So for other folks, they may find that keeping track of multiple accounts can be challenging. But in particular, for something like your emergency savings or something that's really important or a goal that you wouldn't want to miss out on or mix in with your other spending accounts, yeah, that can be a great strategy.
Great. Anything else that you wanted to offer in terms of budgeting for families? I think it's obviously, you've mentioned it a couple times, it's been a really kind of tough and trying time for a lot of folks in the last couple of years that lost their jobs and, weren't able to replace that income very easily. Obviously benefited, from the stimulus from the government a few times. But what would be your advice to folks that really feel like they're struggling and overwhelmed by the lack of resources that they currently have or by the debt that they feel is just bearing them?
Yeah, well, I think that's something that many of us are experiencing. So I would say, number one, you are not alone. And when you're feeling overwhelmed, reach out to your trusted support network. So let's not, don't hesitate to ask your financial advisor, to check in with your credit union or your financial institution. We really do want to support you in meeting your goals and reducing stress. Now, sometimes we can do that by looking at the loans that you have, with us, or there may be options where we can refer additional resources. So at OnPoint, we've got a partner named Balance who helps us with credit consultations and consolidating budget. For some folks, they like to work on that on their own. And so I would say do what you can to get started, even if it's something small, and then keep going.
Okay, and then this is my last question. Thank you for that advice. I do hope that people reach out and get help and, just like remove the shame around any debt that you might be carrying, because just have the courage to ask the questions, because those questions have been asked by others before, like try to release, if you can, the shame around, whatever financial situation that you're in, and get that advice from the professionals. My last question for you is inspired by producer Bella, who wanted to know, what should someone in their mid-20s know? And I'm going to extend that question because it's like, I feel like you probably have advice for people who are in their 20s versus their 30s and 40s. I don't know if you want to break it down by decade like that, but maybe you can offer us some advice, that is pertaining to the different age brackets that people might be in as they're watching this show.
Yeah, absolutely. At OnPoint, we think about goals both in terms of age milestones or really those goals that you're working towards. What is it that you're hoping for in 5 years or 10 years? But we're thinking about Bella to get started with, a young person maybe out on their own financially. Check your credit, create a budget, start to think about how you can establish or use credit, continue your learning, right? So a curiosity for things related to finances. They're changing quite a bit, and that's not a bad thing. And develop a network of people that you can talk to. So great tips when you're in your 20s. Start your retirement planning if you haven't already. That's probably something that carries over for all age groups. But as you get into your 30s, maybe you've got a home, or maybe you've got aging parents you're beginning to connect with financially, or you're working on a plan to start a new business. So it really depends on what your goals are. But continue your learning, check your credit, and then begin to hone in on how do you get to that end goal.
Yeah, I wish I would have known in my 20s that like every cent that I should just be plugging into a 401k, because in your 20s, what you have is time on your side for that money to grow and pay off, in the decades to come.
Yep, absolutely. And even if you feel like you're someone who's maybe further along in their career or closer to retirement, it doesn't necessarily mean you're out of time, but it may change your strategy. And that's why working with a certified financial advisor, professional planner, or coach really is the best advice. So you can do learning about, lots of different themes and topics, but checking in with someone about your particular situation is a great way to go.
Good stuff. All right, Erin, thank you so much for joining us and for your insight into financial fitness.
Thanks. It's been a pleasure.
And thank you for joining us for this episode of That Expert Show. We'll be summarizing Erin's key points in the tip sheet that we always create after the show. We'll post it to thatexpertshow.com. Hey, you can always catch our show as a podcast as well. So wherever it is that you listen to those, whether it's Google Podcasts or Apple Podcasts or something else, you just search for That Expert Show. You can check out our previous episodes on our website, but also on YouTube. If you're a YouTube person, again, just look for That Expert Show. Hey, I love hearing from you. Like, the whole point of my show is that it's a two-way conversation. You really drive the topic. You drive, the people that I choose to interview and the type of interview that I do. So I love hearing from you. Reach out to me on Facebook, Twitter, and Instagram. Love your ideas on where this show should go. It's on Monday nights at 7 p.m. and it's live. Thanks for everybody that tuned in today through the Oregonian or elsewhere. And I hope that you'll come back to That Expert Show, where you help run the show.